This video is for educational purposes only and should not be considered financial advice. The magic of trading Fibonacci extensions with order blocks. In this video, we will be going over the amazing results you can have by using Fibonacci extensions with ICT order blocks. Here is what we will be going over. The key levels to use for Fibonacci extensions. The correct way to draw Fibonacci extensions from order blocks. Characteristics of price movement at various key Fibonacci levels. Chart setup. The main levels you should have on your Fibonacci extensions should be the following. If your trading platform allows you to change the color of the lines at each level, it is advisable to use the following color coding. The colors symbolize the following possible actions: gold, neutral, white, reversal, green, go for entry, red, stop. The correct way to draw Fibonacci extensions from order blocks. This may seem like a simple task, but it is important to get this part right in order to use Fibonacci extensions effectively. I know you might ask, why draw the extensions from the order block instead of just using an impulse leg? The order block is the origin of the move, and like a seed, contains the form and the outline of the tree. After much trial and error and study, I have found out that this is the most optimal way to draw Fibonacci extensions from order blocks. Bullish order block. Draw the Fibonacci from the top of the wick to the bottom of the candle body, not the wick, as shown here. Top of the wick to the bottom of the body. For bearish order blocks, draw the Fibonacci from the bottom of the wick to the top of the candle body, not the wick. So here's the wick, and here is the candle body. Characteristics of price movement at various key Fibonacci levels. Here are some characteristics of price movement that occur at different Fibonacci levels. The levels we will address are the ones that are not neutral. Therefore, we will be leaving out 0, 100, 200, and 300. The key Fibonacci levels are 50, 79, 127, 161.8, 238.12, 261.8, 400, 461.8. These are some signatures and price reactions from the key Fibonacci levels. At the 0 level, we use this level as a stop loss for our entry at the 50% level. 50%. We use this level as an entry point after price has retraced from the 127 or the 161.8 level. 127. We use this level as our alert level to watch for a reversal into the 50% level. 161.8. We use this level as our alert level to watch for a reversal into the 50% if price has not reversed from the 127. 238.12. This is the main take profit area. 261.8. This is the second take profit area. 400. This is the final take profit area. Note, price extends to 127 or 161.8. Sometimes it goes to the 238.12, then retraces to the 50% level for a possible entry. Let's take a look at some examples. Here, price is rejected at the 1618 level. It returns to the 50% level. Here's our 1618, and it goes down to the 50% and then takes off. This is our order block as we drew from the wick to the body. Price broke this structure and then retraced back into this 50%. Here's an example where price is rejected at the 1.27 level and returns to the 79% level. Here is our order block. We drew from the wick to the body. Price broke structure, came back to the 79% level. This happens a lot if price is going to move far and all the way to the 2618. And as we see, price moves very rapidly through all the other levels straight to the 2618. Here, price is rejected at the 238.12 level. It returns to the 50% level. This is your 238.12. Price goes all the way back to the 50% level. And as you notice, that recoil created all the energy for it to move all the way up to this 4618. You can think about it this way. Once price clears all of these other levels, 127, 1618, and the 23812, it has room now and no obstructions on its way to the 400 and the 4618. This is the optimal trade that you will see. Look for liquidity to be taken with a long up candle that does not have any follow through. Then it is engulfed by this candle. That is a clue that this is going to be a reversal trade. You draw your Fibonacci on the order block from the wick to the body. Then as price reaches 127, see, it almost reached it here, but then it fully reached it here. Then it goes back and retraces right to the 50% level. There's a very low risk entry, and you had zero drawdown. You enter at the 50%, and it goes straight on down to 400. In this example, price is rejected at the 238.12 level, right here, and then returns back to the 50% level for an entry. This is actually the continuation of that previous move. If we look on this chart, we see the move happens to the 400, consolidates, and then creates another move. And that is this one, all the way down to the 238.12, and then reverses back to the 50%. And again, since price has been cleared for takeoff, so to speak, it goes all the way down to 400 and the 4618. This is just to show you the connectedness of all these ideas. In our previous video, we talked about price consolidation and how contracting price action might have you languishing for a while waiting for a trade setup. We saw price break out here, and then in our previous discussion, we would wait for a move to the 50% of this order block and then take an entry, as we did here. But you're still waiting for price to go down. If you use your Fibonacci extensions, you can draw from this order block, and also as a note, draw the extension from the most recent order block. We could have drawn the order block Fibonacci here, but we drew it from here. This is the most recent order block, and price breaks that structure, which is at the 127 level. Then it retraces back into the 50% level. So as we see in our next example, if you would have entered here, then you would be assured that your trade is correct, especially when price tries to return back but closes below. Then price moves down, goes all the way to the 400 level. This is a 4.79 to 1 return on risk, whereas this trade was a 2 to 1 return on risk. And even if you took a second trade, you still would have had 4 to 1, and here you have 4.79 to 1. To recap, Fibonacci extensions are an amazing tool to formalize your trading strategy. Using this tool can give you confidence in trading and help you see repeating patterns in price movement more clearly. It is similar to a roadmap, giving you the lay of the land and the important landmarks on the way to your destination. If you found this video helpful, please like and subscribe for more videos like these. Also, please leave a comment if you have any questions or if you have other video suggestions. Thank you for watching.